This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain, and cryptocurrency space. Thanks for tuning in. Before we get started, I want to say thanks for listening. Our listener numbers are really starting to take off, and I want to make sure we continue that momentum. The podcasting game is all about subscribers and audience growth. We've got a superb lineup of fantastic guests with new episodes every week. So if you enjoy the show, please hit the subscribe button. And if you're an Apple user, grab your iPhone, open the podcast app, press subscribe. And while you are there, please do give us a 5-star rating. If you're using Spotify or a different podcast app, the same goes, folks. Please make sure you subscribe so you know when each new weekly episode drops. Okay, let's go. Let's get into it. My guest today is Mark Yusko. Mark is the founder, CEO, and Chief Investment Officer of Morgan Creek Capital, where he has $2 billion in assets under management. Mark is one of the most successful and insightful investors on the planet. In recent years, he has become one of the world's most articulate Bitcoin bulls. Hello, Mark.
Hey, thanks for having me on today.
Now, Mark, you've had a long and successful career as an investor and as a deployer of capital. You've been right at the edge of institutional investing for decades. You're an early champion of alternative assets. And in fact, your tagline is alternative thinking about investments. What do you mean by alternative thinking?
The reason our tagline says alternative thinking about investments, I just got tired of this whole idea that alternative investment should be a small part of your portfolio. And so we said, all right, let's think alternatively about how we invest. And let's start from the premise that the very best in every business migrate where they can make the most money. And so if you think about the legal structure around alternative investments, they tended to be more favorable. So people left the traditional asset world and went into these alternative structures and started managing capital. So we have built portfolios for clients over the years that were very heavy in the managers and structures that we thought gave people the highest likelihood of a better or superior outcome.
Mark, one of your big investment themes is investing in innovation. You've begun exploring the digital asset class, and I know along with Anthony Pompiolano, you guys have founded Morgan Creek Digital Assets, an early stage investor in blockchain technology and digital assets. What I'm fascinated by is you've really gone deep here with an incredible amount of conviction in Bitcoin and blockchain as a technology revolution. So much so, Mark, you've been prepared to put your reputation on the line by going out into the media and flying the flag as a major Bitcoin bull. So that's real skin in the game in terms of both financial investment in your fund, but also in terms of your personal reputational risk. So tell me, how strong is your conviction in Bitcoin and the digital asset class?
Oh, look, great question on so many levels. The whole idea of innovation as an asset class is something I actually do feel very strongly about. And you think about it, all great wealth in the world, right, came from concentration, concentrated bet on a technology or a business or, real estate or things like that. So this idea of concentrated bets generating superior wealth long-term, I think is real. So innovation has evolved around technology and particularly computing technology over the last 70 plus years. And you can trace it back to the beginnings of computing back to 1954 with the mainframe. And then 14 years later, it was 68 with the microchip. And 14 years later, it was 82 with the personal computer. And 14 years later, it was 96 with the internet. And 14 years later, it was 2010 with the mobile net. And now we're going to come up on 2024 for what I call the trust net, or the internet of value. Two things come up with that. One, why is it always 14 years? I actually don't have a good explanation for that other than innovation tends to be driven by young people. Also, maybe it has to do with S-curve adoption. It takes time for people to actually adopt new technology because they're afraid of it at first. That transition of computing power has led to a handful of just extraordinary opportunities to build incredible wealth if you had the willingness to step away from the herd and invest in something new. In fact, my pinned tweet is the greatest fortunes, the greatest wealth is created by investing in something that you believe in before others even understand it. It's entirely true. So I go back to early 1990s, and there was this thing called the internet. People said it would never be important. Paul Krugman said it would never be more important than the fax machine. And I was at Notre Dame at the time, and we happened to believe in this invest in innovation theme. And we had a lot of capital invested with venture capitalists in Silicon Valley. And some of them put some money into little companies like eBay and Yahoo. And we made hundreds of times our capital. It really separated our performance from the other investors out there. And today, I think we're on the verge of this next innovation wave around blockchain technology. So you asked about my conviction level. One of the things I say separates great investors from others, and I feel like I have some credibility on this point in that, I had the greatest job in the world for the last 30 years. I got paid to go around the world and talk to the smartest investors in the world. And I've learned from them. And one of the things that they all shared was an incredible ability to gain conviction on an idea. And what separated the really top investors from the rest was their uncanny ability to press their winners and to double up. Most people double down, right? They buy something, it goes down, they think they're right, the market's wrong, so they buy more, it goes down some more, and they buy more, and then they lose a lot of money. And most people, when something starts to go up, they immediately take profits because they're afraid they're going to lose their profits. So they pull their flowers and water their weeds. And that's exactly the opposite of what you should do as a great investor. I've always believed that you need very high conviction to succeed as an investor. Well, how do you get high conviction? One, you have to do the work, and that gives you some edge. Whether that's one of my big things again on Twitter is #edge. What gives you an edge? Well, you could have an analytical edge. Right? You could have a better model or a better process. You could have an information edge. You could have access to information. I don't mean illegal information. I mean just you have better relationships. You have smarter people that or you just dig harder and you work harder to get good information. Or you could have a processing edge, right? You could have faster computers, or you could have moved your supercomputer closer to the exchange so you can trade faster than others. That's what the high frequency trading edge is. And then there are other edges that you can gain, but that conviction comes from having one of those edges.
So good, Mark. And yes, everyone is looking for an edge, whether as a trader or an investor. You got to have that edge. But as you say, you do have to put in the work, and then you have to sharpen that edge. And that is how you build conviction. I am curious though, Mark. You have this strong, unwavering conviction now. But what was your first introduction to Bitcoin and blockchain? What was your entry point?
I was very lucky early on. I had exposure to blockchain technology and crypto assets from a very good friend who I had backed, 15 plus years ago when he spun out of Tiger Management to form a hedge fund. And 6 years ago, he called me and said, this is Dan Moorhead from Pantera. And he said, I'm shutting down my hedge fund and I'm going to raise a fund around blockchain technology. I said, you're going to do what? I said, first of all, why did you give back $1 billion of assets where you're charging meaningful fees? And two, what is this blockchain thing you're talking about? And I'd kind of heard about it. This was 2013, but I hadn't really spent a lot of time on it. I talked with Dan a lot, and he educated me, and nobody believed him, right? He raised 15 million, or maybe it was 18. Maybe it was $18 million for his first fund, and nobody really believed it. Truth is, he raised two funds, one for Bitcoin only, one for blockchain technology. I didn't really understand Bitcoin, but I got the idea of picks and shovels. So invest in the picks and shovels fund. Nobody would complain. That's up 10x. But I should have invested in the Bitcoin fund. That's up 140x. So best performing hedge fund in all hedge fund history. 2 years ago, I had met this guy, Anthony Pompliano, Pomp, who people know him on Twitter. He really convinced me that we needed to act in terms of Morgan Creek going down this road. So we launched Morgan Creek Digital last year. We raised a fund. We put that fund to work. We're out raising a second fund today. And so that conviction was born from doing the work, listening to smart people, making some mistakes, learning more, and then really having that aha moment where it finally dawned on me that what we're talking about is a technological evolution equivalent to the internet.
Mark, I love that. And speaking of technology revolutions, what people don't understand is these revolutions, they start off so slowly and they just slowly, they begin to pick up speed. And you hinted at this before when you mentioned the S-curves. But what happens is exponential growth, right? That's how networks grow. One of my favorite books, Mark, is Ray Kurzweil's The Singularity is Coming, in which Kurzweil maps out this possible path to the future where somewhere around the year 2045, that's when the AI takes over and humans get left behind. It's called a singularity because our small human brains just can't comprehend the possibilities beyond that. But here's my point. The way we get there is Kurzweil's idea of the law of accelerating returns. The idea is a wide range of evolutionary systems, computer chip capacity, and especially technology networks. They tend to increase exponentially, but the human brain is organic and it's not wired to understand exponential growth. What's an S-curve, Mark? Talk to me.
Oh, look, I think you bring up so many incredibly important points, and I could actually talk to you all night about this because it is the essence of why the average investor misses so many great opportunities, because humans function on a linear plane. Like if I ask somebody, what's 2 times 2? They can immediately say 4. But if I say, what's 17 times 23? They can't do it. And that's actually been proven to be the limit human intelligence, right? You need a calculator to do that. I mean, some people can do it, but the average person can't come anywhere close. So when you start talking about nonlinear logarithmic parabolas, exponential growth, right? Our biology is not set up to do it. What an S-curve is, it's how all new ideas or new technologies are introduced and ultimately adopted into a society. And if you draw a line that starts off, very slowly, almost parallel to the ground, that is the originators, people that come up with the idea. And then you've got this early adopters that these are the people that line up and camp out overnight for the first iPhone. Then as that line starts to slope upwards a little bit, it starts to make an increasingly rapid ascent and starts to go parallel to the ground to 45 degrees, to 50 degrees, to 60 degrees, and starts to dramatically slope upwards. And that's where you start to get real adoption. You get the early majority, then you get the majority, and then you get the late majority. And then it starts to look almost asymptotic. It starts to go almost vertical and then makes the top of the S and matures. And it took 100 years for radio to follow that S-curve, and it took 40 years for television. It took 10 years for cell phones. And now, here we are a couple of years into people starting to adopt Bitcoin. And why is it that we can't process exponential growth? Well, that's just limitations of the human brain. Why is it that all things grow in this exponential way? And that's just biology. You think about anything, whether it's a virus or whether it's, aspen trees in an aspen grove, or whether it's fish populations, they grow slowly at first, but then they start to grow fast, and they start to grow really fast, and they start to grow really, really, really fast.
Really, really, really fast indeed. And listeners, if you're not familiar with Ray Kurzweil, I'll put the link to his book, The Singularity is Coming, in the show notes. It's a little bit of a controversial book, actually. But boy, if you're looking for a hit of pure techno-utopian science fiction-infused future immortality business, well, Kurzweil is your guy. Mark, I like this idea that the true miracle of Bitcoin is that it was really able to survive its early fragile years and was able to move from 0.004 cents to $1 and reach critical mass where network effects started to kick in. That was the hard part, right? The subsequent moves from $1 to $10 to $100 to $1,000 and $10,000 and beyond. That is simply the normal growth of a network as the network's effects develop over time. Mark, that's how networks work, right?
There's this thing called Metcalfe's law. Networks are different than other types of technology. And a connected set of devices becomes a network. And networks grow according to this exponential way. 2 people tell 2 people, you got 4. 4 people tell 2 people, you got 8. 8 people tell 2 people, you got 16. When you start getting up to big numbers, 512 turns into 1,000, 1,000 turns into 2,000, and suddenly you're growing at this incredible rate. And so networks tend to surprise us all. 10 biggest stocks in the world today, 5 of them are networks. They're not truly hierarchical companies. They are truly networks, and their value is derived from their user base. Cryptocurrencies, particularly Bitcoin, are great examples of this. Problem is the price differs from the value pretty much all the time. It's like a pendulum, right? How long is the pendulum in the middle? Almost never. It's on one extreme or the other. So when people are fearful, it's way below fair value. And when they're greedy, it's way above fair value. As an investor, the way to think about it is, one, either buy it, tuck it in a drawer, and don't look at it. Right? That's what people should have done with Amazon stock. What people forget about Amazon, every year in the last 20 years, it's had a double-digit drawdown, including this year. And twice it went down more than 90%. So the reason nobody's held it for 20 years is they get shaken out by the volatility. Now, the volatility wasn't a bad thing. The downside volatility seemed bad, but the upside volatility was much higher than the downside volatility. So the positive outcome was hundreds of times your money had you held on. Same thing true in Bitcoin. When people first bought in at $1 or $2 or $5, it ran to $10, and then it fell to $2, people panicked and sold. Well, then it went to $100. And then people bought, because human beings do 2 things really well. We buy what we wish we would have bought, and we sell what we're about to need. So they chased the hot dot at 100 when the fair value was probably more like 20. And then the price fell back down to $10. And then they sold. And then the fair value rises. Maybe it's $100 or $200. And so here we are today. Fast forward, we think fair value of the network is somewhere $11,000-ish. And the price today is lower than that. So I'd be a buyer. And when it was 20,000 with the fair value of 10, you should probably be a seller or just a holder and don't look at it.
Yes, indeed. People underestimate how difficult it really is to hold an asset like Bitcoin when it is subject to these extreme periods of volatility. There's an accurate Bitcoin meme that says something like, if you can't handle my 80% drawdowns, you don't deserve my 1000% gains. And I think, like any good meme, there's a powerful nugget of truth in there. Hey, let's go to a quick break. And when we come back, I want to talk about the case for why institutional investors need to get off zero.
The Brave New Coin initial exchange offering is here. Having led the way with institutional-grade digital asset data, research, analysis, and portfolio management since 2014, the BNC IEO is live on liquid.com from October 18th. Unleash the power of BNC Pro. Research, chart, screen, analyze, and report, all on a single platform, unlocked with the BNC token. No monthly fees and optimized for micro transactions. A trusted team, working solutions, and real utility. The Brave New Coin IEO launches October 18th. Get verified, be ready, pre-register today at liquid.com.
Mark, you have these hashtags that you like to use on Twitter, and you and Pomp, you have this Twitter campaign, hashtag #GetOffZero, where you make the case for why institutional investors need to get off zero and allocate towards crypto assets. But because you're a walk the talk, skin in the game kind of guy, you and Anthony, you travel around the US and you meet these institutions and you pitch them. And you have this webinar on YouTube, which I think is one of your pitch decks. So it's you going through this deck and you're just smashing goals for 45 minutes. You take the viewer through the deck and down this intense rabbit hole where you construct this scary narrative of why the share markets are topping out, what the central banks are doing wrong. Then you come out the other side and you create this shiny new narrative about why crypto is still so early, so disruptive, and to be frank, why crypto represents the single most compelling investment opportunity in a generation. You don't mince words. I'm curious though, Mark, when you and Anthony do this pitch to these institutions, what do they say when you drop this level of knowledge on them?
Again, just fantastic question. And I appreciate the kind words on the presentation. Our campaign of Get Off Zero is really simple. If you go back through any of the alternative investment phases, where 30 years ago, hedge funds were taboo because that's where all the bad guys were. And now hedge funds are part of everybody's portfolio. There's always this resistance to the new idea. And what happens later is people look back and say, oh, if you don't have those things, you're not a good fiduciary. And so what we're predicting is that 10 years from now, people will look back and say, you're a bad fiduciary if you have zero exposure to crypto assets. So our whole campaign of #GetOffZero is to say, look, zero is the wrong number. I'm not going to tell you what the right number is for you. I can make an argument for 1%, 3%, 5%, 10%. I can make an argument for even bigger numbers because of the low correlation and the diversification benefits and the upside potential as we see in the assets. But zero is the wrong number.
Yes, Mark, I love that. You mentioned the asymmetry of Bitcoin, and that's one of my favorite ways to understand Bitcoin, really. A simple way to understand Bitcoin is that it is simply the single greatest asymmetrical investment opportunity on the planet. It has been for the last 10 years, and it could well be again in the future. But no one understands modern portfolio theory like these professional institutional investors that you meet with. And for them, the holy grail is always that high risk but high return uncorrelated asset. And Bitcoin has performed that function extremely well for the last 10 years. And in fact, no other asset class comes close.
Oh, amen. I won't even count the first 5 years, because the first 5 years, it was too illiquid. You couldn't put real money in it. And yeah, a bunch of people put in $1,000, turned into many millions or billions. Great. Good for them. Love it. But it's really the last 5 years where it's been liquid enough. You put all the endowments in the United States together, they're $600 billion. So 1% would have been $6 billion. 5 years ago, you actually could have put $6 billion into Bitcoin. It would have been hard, but you could have done it. And if you would have taken 0.5% out of stocks and 0.5% out of bonds and put that 1% in Bitcoin, instead of the 7.2% return that those endowments earned over the last 5 years, it would have made 9.2%, 200 basis points better. But here's the crazy part. Had that Bitcoin failed, right? And the Lindy effect says the longer something survives, the longer it's likely to survive. But had it failed, their return would have gone to 7. So they would have lost 20 basis points. So a 10-to-1 upside downside, the asymmetry of Bitcoin as a diversifying asset and the fact that it has 0.15 correlation, the lowest correlation of any alternative asset out there, makes it the perfect institutional asset.
Mark, I mentioned the webinar before, but you're also known for writing these incredible quarterly investor letters.
I've taken a couple quarters off. I wrote them religiously for many years, and I love writing them. But when you write a 75-page letter, they actually take a decent amount of time. And some people were asking me to put some time into some other things. So I've taken a couple quarters off. I really enjoy writing them, and I probably will write another one.
I want to relate this to the wit and wisdom of Charlie Munger. Charlie said, "In my whole life, I've known no wise people who didn't read all the time. You'd be amazed at how much Warren Buffett reads and how much I read. My children laugh at me if they think I'm a book with a couple of legs sticking out." What do you think Charlie meant by that, and how does that relate to what you were doing with your newsletters?
Look, reading is the source of all great knowledge. And leadership theory goes all the way back to the ancient Greeks and Romans. Lots of things that Seneca said 2,600 years ago, you could have said yesterday, and they still apply. And books, when people sit down and take the time to construct a story or an argument or a recording of history in an autobiography or something, it's just incredible amounts of wisdom. And so what I've done with my quarterly letters is I pick a great investor. And I've done Soros, I've done Sir John Templeton, I've done Julian Robertson, I've done Seth Klarman. I've actually done a couple philosophers. So I wouldn't call them great investors, but I think there's a lot of investment wisdom in philosophy.
You tie in everyone from Willy Wonka to the science of baseball, Darwin's theory of natural selection, Isaac Newton and the laws of gravity, and a lot more. So, Mark, what I'd like you to do is get you to riff on one of the key points from one of the letters that I enjoyed most. You have a gift for creating a compelling narrative around a theme of innovation or technology or investment and putting it in historical context. So the question is, why is crypto a virus and why is the virus spreading?
Yeah, look, it's so cool because we've taken a lot of grief about this. My partner, so Anthony Pompliano, started with this quote, "The virus is spreading." What he was trying to say was, look, people are starting to wake up. Blockchain technology is real. Bitcoin is real. And he got a lot of pushback saying, that's stupid saying viruses are bad. Why would anybody want to have a virus? So I kind of took it and I ran with it. I said, well, let's evaluate this. And I said, so the first misperception is that all viruses are bad. They're not. There are actually some viruses that are actually quite good, particularly some that affect the gut biome, which we're learning more and more is really part and parcel to long-term health and intelligence. What the virus is spreading really means is that in biology, you start anything with patient zero, whether it's a virus or a disease or an idea. And over time, there is this, as we were talking earlier, there's this exponential growth. It grows slowly at first, and then it starts to really grow fast, and then ultimately it explodes in growth. And in the natural world, this viral growth pattern is exactly an analog for the S-curve adoption of technology. And that's just math, right? In fact, one of my hashtags is #JustMath. A lot of things are literally just math, and they follow the same mathematical principles, and exponential growth is exponential growth is exponential growth. There is this term, going viral. Going viral is when the use of some new technology, as you said, the law of increasing returns from Kurzweil, and you get this viral effect that is one person looks at it, they tell two people, and those two people tell two people, and they tell two people, and it starts to be adopted exponentially. You actually, in technology, want things to go viral. So this idea that the virus is spreading suddenly can take on a really positive idea. We view Bitcoin and blockchain technology as these positive forces, these positive viral forces that are going to bring us to a new level of security, a new level of scarcity in money or hard money, which will, we think, restore income and wealth equality, get rid of the central banking cabal.
Sure, Mark, but can you explain what you mean by that? Because you're a finance guy, you know the system. You're not saying burn down the banks, but what you are saying is that central banks, governments, the Fed, they're not on the right track, are they?
And look, we're not a burn down the banks and replace everything tomorrow, but the central bank system wasn't created for the little guy. It was created to make their bankers richer. What it's resulted in is the ability of central banks and governments to control their currency. And Thomas Jefferson said it best. If the people ever allow banks to control the issuance of currency, they will have their future of their children and grandchildren stolen by those governments, first in the form of inflation and then deflation. And now we've got this deflationary spiral. I call it the killer Ds. Bad demographics, too many old people. You got too much debt, and debt is a inhibitor to growth. And then you've got the result, which is deflation. And deflation leads to overspending by governments, which leads to the need to devalue the currency. And I call it the dictator playbook, another bad D word, which is the cronies at the top. So everybody's trying to blame capitalism. It's not capitalism that's flawed, it's crony capitalism. So it's the small number of people that gather up all the assets. So the top 0.1% of the people have the assets. Then they devalue the currency. Like, you can look, I'm sitting here in my office staring at a 100 trillion Zimbabwe dollar bill, right? That wouldn't buy a loaf of bread. Or, you could look at bolivars last year in Venezuela. The Venezuelan stock market was the best performing market in the world, but you didn't want to own it because your bolivars became worthless. So as you look at what's happening in Japan or Europe or the US and the devaluation of these currencies, what Bitcoin and blockchain can do, again, as a virus, is they can inoculate the population and protect them. Right? It's like when we inject a virus into people as a flu shot. And it's the same idea as if you take some of your fiat currency and you opt out of the bigger system and you buy Bitcoin, you have hard money that now will protect you against the devaluation or the theft or the kleptocracy of the fiat system. So it's all interrelated. And, again, most people just read the headline, the virus is spreading, and say, oh, that's stupid, I don't want a virus. But all of us who take a flu shot, that's what you got, right? And you took the virus into your body to protect you against the bad live virus. I'll argue that the government and the central banks are those live viruses that you can protect yourself with Bitcoin.
Thanks for touching on some of your macro thoughts there, because I know people like Raoul Pal and yourself, you guys have been banging the drum. Not that the sky is falling, but the indicators are really starting to wobble. Kind of reminds me of another quote that I've seen you use, and just talking about your messages, whether it's a hashtag, a webinar, or a 60-page investment letter. I love this idea that you've talked about with Lord Keynes, who said, words ought to be a little wild, for they are the assault of thoughts on the unthinking.
Oh, man, you are good. I am thoroughly impressed and humbled that you would spend this much time to actually prepare and read some of the stuff that I've written, because I do love that Keynes quote. Look, I'm a hyperbolic personality. I tend to speak in very certain terms, and I do believe that words need to be a little bit wild. I think you need to push people out of their comfort zone. There's only two states in the biological world, growth and death. I prefer the former, don't like the latter. And so to grow, you need pain, right? Think about working out your muscles. You're going to have pain. Those wild words cause mental pain for many. They don't want to hear it. They don't want to hear that their wealth is being stolen by the central banks. They don't want to hear that inflation is a tax on poor people. Whoa, no, that's not right. That's not right. Well, but it is. And we step back and think about it objectively without emotion, and we look at facts instead of our beliefs. Beliefs, the human brain is actually biologically conditioned to form a belief first and then gather data that supports that belief and reject data that challenges that belief, which is exactly upside down of the way the world should work, right? Is we should gather as much data as possible, gathering data, looking at patterns, interpreting the data, then forming the hypothesis or the belief. That's how it's supposed to work. And the more we do that, the more we have the ability to get out in front of these big secular changes, these big technological innovation waves, and the better off we'll be as investors, and actually better off as citizens and all kinds of other things.
Fantastic stuff, Mark. That feels like a really nice place to finish off. Let's go to a break, and then when we come back, we'll finish off with another round of crypto hot takes.
Crypto, the asset class that doesn't sleep. The markets move quickly, with profits made and lost around the clock. It's a whirlwind, and you've got to keep up. You need enhanced tools that deliver timely data and accurate analytics so you can make informed decisions. You need BNC Pro, a customizable, institutional-grade suite of applications to help you manage your crypto investments all in one place. Get accurate market data, track your trades or custom holdings, and see profit and loss at a glance. Monitor any asset, trading pair, or exchange using Brave New Coin's trusted market data. Integrate BNC Newsfeed and filter it to deliver only the news that matters to you. Never miss an opportunity, save time, and make better informed decisions. Finally, the all-in-one terminal experience you need to master this brave new asset class. BNC Pro, launching Q4 2019. Join the waitlist today at bravenewcoin.com.
Okay, we're back. Now, Mark, I know you don't do short well, but are you ready for some rapid-fire crypto conversation hot take questions?
I will try, Andy. I will try for you. I will focus. I will focus.
All right, Mark Yusko, I want your hot takes, your hot fire. Take your best shot. Here we go. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
Definitely a maximalist with a toe dipped in the idea that altcoins are really pre-seed stage venture capital. So 95% of them go to zero, but the 5% that don't are going to be 10, 20, 100 baggers. So if you're good at technology, you should play there. If you're punting in altcoins, you're probably going to lose a lot of money.
Mark, what would you say is your firmest conviction crypto opinion?
Oh, that's a really good one. Probably my most firm conviction is that blockchain technology will be the operating system for the Internet of Value, or what I call the trust net, and that Bitcoin will be the primary store of value or digital gold in that ecosystem.
Nice. Mark, Facebook's Libra coin. What do you think here? Good or bad for the crypto ecosystem, and why?
I think it's innovation and leadership are always good. I don't like centralized systems. I like decentralized systems. However, I think a centralized system can serve as that gateway drug to get people to try something new because they're comfortable with Facebook. They trust Facebook, so they'll try Libra. But what it does is it gets people comfortable with the idea of wallets and of crypto assets. Because again, it's not a cryptocurrency. A cryptocurrency must be decentralized. A digital currency like Libra is just a digital form of a tokenized asset.
That's right, but they're certainly doing a lot to educate people about the possibilities of blockchain and the wonderful world of crypto. Mark, let's put you on the spot. Who wins the American presidential election 2020?
Boy, that's a tough one. So I'm going to say somebody besides Donald Trump. I would hope, and it's my pick. I love Pete Buttigieg. I think he is fantastic. Some people think he's too young. I think that's actually what we need, a pass the torch moment, like we had in the 60s with JFK. So I would hope that he would win. I think it's a long shot, unfortunately. I think Trump's going down, yet to be seen who's going to emerge as their front runner.
We'll just have to wait and see. Mark, UBI, Universal Basic Income, as a fix for AI-induced automation. Is this a good idea?
Ooh, it's again such a good question. I am not a UBI fan, but I love how you've made me have to change my mind a little bit, the way you've tacked on the adding it to as an incentive system for AI and automation. That I'm going to have to give it a little more thought to, because I could see a role, but I would actually not want it to be fiat income. Then I would want it to be a crypto asset, kind of like the way Bitcoin rewards miners.
Nice, I like that. That's a good idea, Mark. Bill Gates famously said, "We tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What does the blockchain space look like in 10 years?
One of my favorite quotes from one of my favorite people. I think he's just an inspirational businessman and leader, and what he's doing with the Gates Foundation today is otherworldly in terms of its impact on the globe. And I grew up in Seattle, and one of my big regrets is a lot of my friends don't work anymore because they went to work for Bill and I didn't. Look, I think the next 10 years are going to be truly unbelievable, meaning great investors have an ability to imagine the unimaginable. I think the great investors of today, when we look back 10 years from now, will be the ones that can envision a world where blockchain technology is the operating system of the Internet of Value, the same way that DOS drove computers and iOS and Android drive our mobile phones. Why we call them phones, because they're not really phones, they're supercomputers. So one is full adoption of blockchain as an operating system. The second is a significant movement of assets around the world into hard money, or Bitcoin as one of the major currencies around the world. And then I think the last piece of it will be the creation of some of the largest value companies in the world, very similar to what happened with both the internet and the mobile net. So I'll go on record and say I think we'll see the first trillionaire formed from blockchain, and I think we'll see the first $10 trillion company provide some of the infrastructure around this business.
Speaking of Bill Gates, I wonder if we can just pause the crypto conversation hot take section for one moment. Mark, you mentioned the incredible work Bill is doing with the Gates Foundation. Have you by chance watched the Bill Gates documentary on Netflix?
I have not watched the Gates documentary yet, but it is on my queue to watch. I've had a couple friends watch it.
Yeah, look, you've got to watch it. It's a 3-part documentary that covers Bill's life and history with Microsoft. It really looks at the 3 big challenges he has taken on: eradicating polio, building toilets in the third world, and creating safe nuclear power. Now, Bill has had major setbacks on each of these challenges, but of course, he's continuing the good fight. But I bring this up because, Bill obviously is best mates with Warren Buffett. Warren turns up in the documentary, and of course, they're playing bridge in Omaha, dressed very casually. Warren's eating a cheeseburger, and there's a Diet Coke in every single shot. Why is Warren Buffett so shameless?
Look, Warren is pretty amazing and I think shameless is such a great word. Warren is, contrary to his perception, is not the aw shucks country guy who grew up in Omaha and rags to riches story, right? His dad was one of the most powerful congressmen for a long time. He's very well connected in DC. He gets the call from governments. He's paid lots of lobbying dollars to make sure he gets the call from Bank of America when they need liquidity. So the aw shucks stuff is kind of silly. And he's heralded as this great stock picker. Really not, right? I mean, what he is a genius at creating a business structure that takes advantage of the power play, which is he doesn't pay any taxes. He's deferred all of his taxes because of the structure. That's genius. He is a genius for using insurance, which has negative cost of capital, borrowed money, right? Policyholders give you their money to use until they have claims. So you actually get paid to use other people's money to invest. And then he buys low volatility commodity companies that pay dividends like Coca-Cola, and he levers those up through a tax-deferred vehicle, and it's a great investment. So look, absolute genius, but not a stock picker. And so he cultivates this aw shucks because it works, and it makes people not pay attention to the fact that he can block pipelines from being created because he owns the railroads that carry the oil. And when those oil tankers explode and cause fires and hazardous chemical spills in towns, nobody blames Warren. They blame somebody else. So
that's right, because there he is, just casually dressed in T-shirt and jandals, eating a cheeseburger and drinking a Coke out on the deck in Omaha. But Can we comment just briefly, Mark? Obviously, Warren famously referred to Bitcoin as rat poison squared, and then Charlie Munger one-upped that by comparing Bitcoin to trading in freshly harvested dead baby brains. Incredibly evocative language. What's going on behind the scenes with that?
Well, look, it's back to what we talked about with the Keynes quote. Words should be a little bit wild.
Yes.
What did those do? They created a buzz. They got media attention. It's always about consider the source. When anyone tells you anything, you should think about why they're telling you that. So why would Warren Buffett and Charlie Munger say that Bitcoin is bad? Or why would Jamie Dimon say it's a fraud? Well, think about it. They are the incumbents, right? 46% of Berkshire Hathaway's and financial services companies, particularly banks. Some of the banks are really bad actors, like Wells Fargo. So you want to talk about rat poison? Let's talk about Wells Fargo. How do you know what rat poison tastes like unless you happen to be a rat? Why do they say it? They say it because they don't want people to embrace something that could hurt their monopoly or duopoly or oligopoly or whatever it is. They have this cushy deal with the government and with their tax structure and with these great businesses. And then they can be part of this thing I call stealth QE, where, they got the government to cut taxes for people like Warren under the guise of a middle-class tax cut, which it wasn't. And they cut the taxes for the richest people in the world, the corporate owners, in exchange for the corporations buying back stock. So what happens? Warren buys a bunch of Apple stock, then they cut Apple's tax rate in exchange for Apple not hiring more workers or building more factories, but by buying back Warren stock and making him richer. So it's all a big circular kleptocracy. And so Warren doesn't want Bitcoin or anything else to disrupt that. And at the end of the day, change is hard, particularly for incumbents. Every disruptive technology is always poo-pooed by the incumbents. You should never, ever, ever ask an incumbent what they think about new technology.
Wow, some absolutely fascinating insights there, Mark. Thank you very much for sharing your very candid thoughts. Shout out to Warren Buffett. Shout out to Bill Gates. The Netflix documentary, it's called Inside Bill's Brain. It is a must watch. Count how many times you see a Diet Coke in shot. All right, back to the crypto hot take round. Mark, William Gibson said the future is already here. It's just not evenly distributed. What's an example of the future being here right now, but most people just aren't aware of it?
Bitcoin's a perfect example. I mean, Bitcoin is a ubiquitous asset that can be a perfect store of value, can be a medium of exchange, and could be the solution to the fiat fiasco that's been created by all of global currencies leaving the gold standard. You know, commodity currencies have worked for thousands of years. Fiat currencies never have. So they all fail. And I think cryptocurrency will ultimately replace them all. So there's a very small number of people globally who actually own any Bitcoin at all. There are only 21 million of them ever to be created, and some of them have been lost forever already. So, you know, we can all do the math. 7.5 billion people, you know, call it 18 million Bitcoin. Not everybody's gonna be able to have a full one. So the future that some people see today that others don't are those that are accumulating, or as I like to say, buy and hodl.
Nice. Mark, let's zoom out. What's the long-term future for the human race? Do you see dystopia or utopia?
I'm going to go with neither. I don't think, the Malthusian crisis is going to happen. You know, Malthus said we'd run out of food when we hit a certain number of billions on the planet. Human creativity and ingenuity allowed us to be more productive in how we grow food and ways to convert energy into value. In fact, if you think about everything we do in life is about taking energy, particularly hydrocarbons, and turning them into value, right? You know, we power our cars to get to work, and then we think and we eat food which is grown using hydrocarbons, and we convert energy into something of value, whether that's, you know, a consulting business or an investment business or a widget manufacturer. Human ingenuity will always find better ways to do that, whether it's renewable energy or other forms of energy. We'll get better and more efficient at that. In terms of utopia, you know, I don't think we're going to all sit around all day thinking big thoughts while the machines do all the work. The candlestick maker didn't like the electric light. The horse and buggy manufacturer didn't like the car, but all were good innovations. So I think the innovation will continue. The pace of innovation will accelerate with better technology, and our quality of life will get higher. But I don't think we get to utopia, and I definitely don't think we have dystopia.
You're a technology guy. You like to invest in innovative ideas. You like to build the future. My question for you, Mark, why are you such a bear on one of the single most innovative companies on the planet? I'm talking about Tesla, Elon Musk. What is your problem?
See, I'm going to challenge part of your question. Yeah. I actually don't think they're innovative at all. You know, the electric car has been around for 100 plus years. In 1907, the largest car manufacturer in the United States was the American electric vehicle.
No, but you're missing the point, Mark, because Elon's mission is simply to accelerate the transition to electric cars. So it doesn't matter if there were electric cars 100 years ago. He's making the electric car transition happening now. What's your problem with that?
Oh, I think he's a fantastic marketer. And I've often referred to him as a fantastic carny barker, but I actually don't think he's innovative. And that's, look, there are a lot of people that love Elon Musk. I'm just not one of them. I think the Tesla car is actually quite nice. Although I found out the other day that I can't ride in it because the sudden acceleration actually made me car sick. It was very strange. I've only had it happen twice in my life. once was with something called a continuous variable transmission in a Lexus, and it happened to me the other day in a Tesla, so I'm probably not going to get one. But I do think that the car itself is quite nice, and there are a lot of interesting, cool things about it. But the bottom line is, I don't think there's much innovation. They didn't create the batteries. That's a Japanese company. My problem with Tesla is the stock. I think the stock is worthless. I think the bondholders will become the equity holders. So I don't really have a beef with Elon. I don't have beef with Tesla. I don't have beef with people buying electric cars. My beef is with people buying that stock and thinking they're going to make money, because I think they're going to lose everything. And there's a difference between a good stock and a good company. I think it actually might be a decent company. I'm not sure of that, but it might be. But I think it's a horrible stock at these prices.
That makes sense. All right, Mark, this has been a lot of fun. Tell me, finally, what is your favorite science fiction book, film, or show?
Oh my goodness. Well, favorite show recently was Stranger Things. I just loved it. And then what was cool about Stranger Things, everyone knows the story that The Wizard of Oz was actually about the gold standard and the stupid decisions by the president, and man behind the gold green or the curtain and all that stuff. But what's interesting is Stranger Things, when you look at the mind flayer, the bad, demon,
the big bad
monster at the end, and you look at a book written in 1910 about the creation of the Fed, the monster that they drew as a cartoon that was going to create all that would rob the rich and suck out all the wealth from companies and deposit it to the big banks on Wall Street looks just like the mind flayer. And when you look at the Federal Reserve Bank building, it looks just like the laboratory building in Stranger Things. So that was just a little weird thing. But probably my favorite book, science fiction book, was probably something by Aldous Huxley way back when I was growing up. 1984 is a pretty interesting book too. But I don't have as good an answer for that as I would like.
Mark, thank you so much for talking to me today. It has been an absolute pleasure. Take us out. The microphone is yours. Any parting thoughts? Tell the listeners where they can find you on your various platforms. Go for gold.
No, Andy, it's great to be with you. So look, we're Morgan Creek Capital Management and Morgan Creek Digital Assets. We are based in Chapel Hill, North Carolina, a small office in New York and an office in Shanghai. I am on, as my wife would say, too often, at Mark Yusko, MarkYusko on Twitter. Our website is morgancreekcap.com. We're very easy to find. My partner, Anthony Pompliano, is known as Pomp on Twitter. He's easy to find as well, A. Pompliano. And my other partner, Jason Williams, is J. Williams FastMed. So we're all out and available and look forward to collaborating and talking to anybody who's interested in the future of technology, innovation as an asset class, and blockchain, crypto, and Bitcoin as topics. So reach out.
Boom. Okay, and we are done. Wow, that was a fun one. Mark is a very interesting, entertaining, and insightful guy. Thank you very much to Mark for coming on, and thank you for listening this far. Yo, if you did enjoy this episode, can you please do me a favor? Please make sure you subscribe to the podcast, and please make sure, if you're an Apple user, would love it if you could give us a 5-star rating, and would love it if you could give us a nice 1-sentence review. We would really appreciate that. All right, we're done. Thanks for listening. We're out of here. This was the Crypto Conversation for Brave New Coin.